Hi, welcome back. Today, I want to talk to you about why a business owner should be bankable, how to build credit and access capital for growth. I think often business owners are not thinking about building credit in their business, and credit for your business actually matters more than you think. And I'm going to get into why and how to go about it, and why it's important, and how to become bankable. Because if your business doesn't look bankable, then you're not going to get loans. You're not going to get access to any kind of leverage that you could use to grow your business. And it's also going to get in the way of your personal finances if you ever want to buy a house or do anything that requires, to look at your financial history in order to qualify for it. And so we're going to get into all of that today and how to become more financially savvy to prepare for this in the future, even if you don't need it now, because it does take some time to build this and put this into place. So, if you haven't met me, I'm Carla Titus. I'm a CFO who helps businesses turn their numbers into leverage. And today we're going to talk about how to become bankable with your business. So, what does it mean to be bankable in your business? A lot of you maybe have heard, we should leverage debt, and nobody explains what that means to grow and scale your business. They're talking about how we're going to look at profit and owner's pay in order to determine, if you are going to be lent to some money. And these are not just vanity metrics. These are really critical metrics that the bank is going to look at in order to qualify you for any kind of loan or debt financing for the business or personally. So you want to make sure that your business first is profitable and it's consistently you paying every month a salary if you're an S corp, or providing you consistent monthly draws in order to qualify for loans. If you're an S corp and you're on payroll, that makes the process a little easier because you have a W-2 to show, which if you're just an LLC taking draws, you can still show your tax returns, which will be a requirement, and your monthly draws that are consistent to show them that you're able to produce the income necessary to qualify for the debt that you're trying to get. But this is why owner's pay is not optional. I see often businesses maybe are profitable, maybe are not. Maybe the owner's paying themselves, maybe they're not. And they're being told, just spend all the money in the business and show no profit because then you don't have to pay taxes, which we're going to address in a different episode. But the reason we don't want to do that is because then we're not bankable. If our business doesn't show profit, then nobody's going to lend you money, especially if you need it. And making sure that you have that profit to show and that consistent in the last 2 years of taxes that show your business actually make money and had profit left over also validates that your business is viable and that you're providing valuable services or products to people that want to buy this from you, and that you're going to be able to qualify for some funding of some kind whenever you're ready to take that out. I also see a lot of business owners that maybe didn't have the best personal credit. They're focusing on building that personal credit, but at the same time, you should be also focused on business. You're building your business credit at the same time to make sure that the business can access some funds if necessary. So I find many founders are revenue rich. They're like always talking about their revenue. They are profit poor, meaning they might not have a profit at all, and that they're personally broke. And this is not the situation we want to have you in as a founder. We want you to be at a minimum recovering that salary that you gave up or forfeited in order to do your business. So if your business not doing that for you today, that is the main priority. Then generating profits above and beyond paying you, and then having extra left over in order to grow and scale the business. Now, if your business doesn't pay you consistently right now, then the business is not an asset, because it becomes a liability because you're not making money with it. So I know that is a harsh truth, but we want to get you to this place where your business is consistently paying you as the first piece of the puzzle in building bankability in your business. Okay, so let's get into what does it mean to be bankable. You want to show that you're stable, that you have grown over time, that you're consistently profitable in your business, and consistently paying yourself every month. in order to do that, you need to have super clear financials, a profit and loss statement, a balance sheet, and statement of cash flow that you can show the bank. You're gonna also show them your W-2 if you are an S corp and paying yourself on W-2 wages or in distributions monthly to showcase that you have monthly income coming from the business to yourself personally, from the business bank account to your personal bank account. And that again, it's consistent, right? We want to show that we are doing the same thing every month, that we're able to afford that every month because the bank wants to know that that you can afford a loan that they're about to give you. You also want to show if you have any kind of cash flow reserves that you've built into the business. We always talk about having an emergency fund, 3 to 6 months of operating expenses just to weather any uncertainty. That shows really well when you're trying to qualify for any kind of debt financing. You also want to have a low debt to income ratio. This is what the bank uses to decide whether you can afford a loan. And that is like you just have more income than the loans that you're paying every single month, and that you don't have too much debt compared to the income that you have currently, either personally or in the business. And then a clear delineation between business and personal finances is going to also be key. We're assuming you're already doing this thing, so we're not going to get into how to do that. But these are the strong financials you need to be able to show, and also tax returns for the last couple of years. Again, going back, this is not something that you're going to just have happen overnight. You want to prepare ahead of time. So if this is something that you'll see in the future needing to do, take out a loan, have some kind of debt to grow the business, you want to start preparing now so that in the next couple of years you're ready to go. And then that consistency really is key for the bank. They want to know that you can pay the debts that you're taking out. So if you don't have that consistency, start building it now so that they can see month on month end that you've been doing the same thing and that it's predictable. Okay, so let's talk about building business credit. What you want to do is not just ignore this because you think it's for big companies only. You want to start building business credit now, and the easiest way to do that is to create or apply for an employer identification number, EIN, and start to get a business credit card with that information and a bank account with that EIN for the business. Again, this is the delineation between personal and business, but also it's the way that you build business credit. So I want you to start by having that EIN and using it to open accounts, like just a basic business credit card will do, where you put your monthly expenses and paying off every month. So make sure that you're very responsible with that debt too, so that lenders can see that you not only take out debt, but that you also pay it back in a timely manner. And then you want to start thinking about, okay, you might start with a credit limit that's low, but over time request a credit increase so that they can see that you can be responsible for more and more money. Now, I don't encourage you to do this if you're about to apply for a big loan, because you're going to get a ding on your credit. So make sure you do it ahead of time. Again, we're building for the next couple of years to take something out. So make sure your personal credit is also in good shape. And if it's not, that you're working to get it into a good standing so that way that doesn't get in the way, because you most likely have to do a personal guarantee, at least for the first loan, because the bank doesn't know, they don't trust you. If you're not putting any collateral or assets against that debt, they want to know that you're personally going to take the risk of backing that loan if something happens to the business and that business can't afford to do that. Now, having business credit also allows you to negotiate better terms with suppliers and vendors, because you can show credit worthiness in your business. So this can impact your business even in the operational side of it. So making sure you have that good, clean credit in your both business and personal finances is going to just help your chances at getting, finance for what you're looking for to borrow. Now, I want to differentiate the difference between leverage and liability, because I find that a lot of you are not using the debt strategically. And the leveraging of the debt should accelerate growth in your business. So if you're going to grow revenue because you're trying to get a new revenue stream going, or you're going to do a key hire ahead of time to develop new revenue and in turn more profit. That's how we want to use debt and leverage it in our business, not just take on the debt and have no plan. Like, this should be intentional. We should have a debt payoff plan and how we're going to tackle the debt once the payments start coming due. If you're going to buy another business, this is also key to understand how that's going to operate in a day-to-day setting on a month-to-month when the payments come due. And then the key thing I want you to get from this is that you need to start building credit before you need it. So by the time that you want to get a loan and such, your business credit has already been built. You have a history, you have that consistency that you can show to the bank. You don't want to start building credit today to get a loan tomorrow. That is going to make it less likely that you qualify. Not saying impossible, but you might have to put some kind of collateral asset in order for them to want to let you borrow. So make sure you're building credit. Again, even if you don't need it, even if you don't want to take out a loan today, always have it ready just in case. Now, one real life scenario I saw happen with one of someone else that was trying to buy a house and was a business owner that they couldn't get it because they didn't have the credit they needed in place or the things that we discussed here today in order to qualify them for a mortgage. And this is really heartbreaking because as a business owner, you're trying to build, your livelihood through the business. And you want to not just pay yourself, but to be able to buy a house one day if that's what you want to do, or even finance a car loan. It doesn't have to be like that big of a purchase, but many founders just tend to write off everything because they don't want to pay taxes. Again, going back to that discussion of like show no income because then you won't have to pay taxes. And then they don't qualify for a mortgage when the time comes because they have no profit to show. Besides their pay, you got to be able to show that your business is viable and profitable. So want to make sure that you keep that in mind if you're thinking about getting a mortgage as a business owner. And if you're an S corp, it makes it a little easier because you have that W-2 paycheck to show as well. But they're going to look at that income ratio again. That's not something that lenders are going to overlook, especially when letting business owners borrow again for a mortgage to purchase a home. And they're going to look at the last 2 years also, going back to like why we prepare now is because they're going to go back 2 years for taxes, look at balance sheet, look at profit and loss to see if you qualify. So you want to be building a business and building that financial profile for your business all the time because this is a long game, right? You're here long term in business. Ideally, you're also building wealth. I talk about this on a separate episode where you're building financial wealth through profits, but also you want to think about the long term of your business. Are you going to be growing it and you need to borrow working capital to do that, or to pad the reserves for cash flow and deploy some of that cash for growth to accelerate that path? What is the plan? And why would you leverage debt in order to help you achieve those goals faster? Now, there's certain reasons I would leverage, business debt to grow a business. And that could be for hiring people that are going to help us generate more cash because we know our model works and it's healthy and it's generating profits. So we're able to accelerate that by bringing in more people. Also, remember, hiring is expensive. So, employees need time to get up to speed and they're not going to produce at 100% day one. So you have to have that cash in order to be able to allow them the time to start producing for your business. Maybe you're an inventory based business and you need to stock up on inventory or you want to buy while it's on sale. So you need to have that what we call working capital, like the cash liquidity in order to purchase an inventory when that opportunity comes. And you don't know when that is. Sometimes it's, all of a sudden, sometimes like, it's coming and you can plan accordingly. So having the cash available for that is key. I would also leverage business debt for marketing because marketing should accelerate growth with clear return on investment ROI metrics on what your marketing should be doing for you, clearly looking at the data to make sure the results are happening from the marketing initiatives and strategies you're paying for and deploying with this cash. And then to upgrade systems because every business grows and their systems have to grow with it. So sometimes it's automating things or saving time or streamlining processes, and we have to hire people or help. And that is a good way that we use and leverage that to streamline the way that we're operating to help us drive systems to the next level and accelerate that path. Now, some ways that you can access financing that we've encountered is we've looked at small business administration loans, SBA loans. There's different types there. Maybe leveraging a line of credit. This is really popular with our clients. We have all our clients have a line of credit that they've been approved that is commensurate with their size of business. And we're happy to help you through that process. If that's something you're exploring to get in your business. Make sure you have a business credit card already. That's an easier low hanging fruit that you can get right away. It requires a lot less scrutiny to get one of those business cards, especially if you've been in business a few years. Maybe it's an equipment loan that you're looking for because you're trying to get a piece of equipment to help you with operations, and you want to be purchasing that and you need the money to do so. So that's going to help your business grow because now you have the tools needed to do a faster, better, easier, and or maybe unlocks capacity in your business to be able to achieve the next level of production that you needed. Now, going back to like what the bank is going to look for again, clean books, positive profit, good revenue trajectory growth year over year. So if you're not working with a CFO who's helping you grow revenue top line year over year by at least 20%, then you need to give us a call. This is what we do and we specialize in. We'd love to help you build that strong revenue growth over time with the strategies that we know work and we can implement in your business. And then don't forget about having strong personal credit because this is going to play a role in the overall process. So we're going to use financing to bridge the opportunity gap that we might have in our business, not to survive a bad cash flow cycle, which I know a lot of you defer to that. You want to borrow to offset a cash situation. And while that's helpful in the moment, it's also going to create more strain in the business down the road because now you have to pay that back and you're still not out of that bad cash flow position, which tells me there is probably an underlying problem that's not getting solved on why your business is not profitable in the first place. So make sure you address that first. So make sure you're using debt to scale what's already working, meaning what's profitable, and not to patch a broken model. Because if the business can't produce the profits to pay that loan back, you're just digging a bigger hole and it's going to be a lot harder to get out of. And make sure that you're reaching out if you need help with fixing that broken model because that is what we do. We get businesses from losing money to profitable in 6 to 12 months. If this is something you're struggling with, we've been able to turn business around as quickly as 30 days from losing money to back to profitable, especially if they've been profitable in the past. There's situations where businesses just go through cycles and they're having a rough time and we can help them get out of that easier. Okay. So we've talked about, the things that you need to do to be bankable today, but just to recap, we want to separate business and personal finances. We want to get your books in order so that your financial statements are nice and clean and reliable. So if you don't have reliable bookkeeping or you don't have a professional bookkeeping team that knows accounting, make sure to reach out to us. We do this service as well because we saw a need in the market and we want to make sure we close it with professionals who have 10 years of experience doing the accounting and can do the bookkeeping correctly. We see way too many mistakes in bookkeeping nowadays that are things that should be addressed by your bookkeeping team that should already know accounting. But if that's not the case, make sure you consider making a change. You want to make sure you're paying yourself consistently every month. Make sure that you're building business credit through either a business credit card, applying for a line of credit, having some sort of way to show that you're credit worthy from a business perspective, and start building a history now. Don't wait until you actually need that big loan in order to start. And then plan for profit. So if you're not profitable today, we need to have a plan in place to get you back to profitable every single month to make sure you have good, healthy financials to show. And then make sure you start connecting with a lender now before you actually need a loan. So that way you have an ongoing relationship and someone to reach out when the time comes when you want to apply for that loan. So bankability isn't just about access, it's about having freedom and access to the funds that you need to use for either the future that you're trying to build in your business, the legacy that you want to leave behind. And that journey has to start now with prioritizing, building credit in your business. And it's not as hard as people make it seem. It's just takes time and consistency and effort and intentionality. So if you're not already running your business that way, we need to fix that in order to be able to help it thrive and be more bankable. Now, if you need help, don't worry, reach out to us. We have a team of CFOs who are experienced and can get their eyes on your numbers and help you address that. If you're not already subscribed to our podcast, make sure you rate and review and share with a friend that might need to hear this information. And then don't forget to subscribe to our newsletter where we put, amazing content to help you get better with your business finances as well. Thank you for listening. Thank you for being here. I hope you all get access to all the credit that you need to grow your business and be successful. And make sure to reach out if you need any help with that.